Hello and welcome to another update video about silver. Just want to give you an updated perspective on the silver chart, also to help you understand what is going to be relevant next week. So the price overall is still respecting, for now at least, the parameters that I outlined in the previous updates. So the price has possibly formed a three-wave move up from the October low. The price in the beginning of October bottomed locally at around $30. Then we had a small five-wave move up in wave one. We had a wave two pullback. This here could be already the third wave. This here might be the fourth. Yeah, and ideally, we get another high in wave five of C of 3. We're dealing here with a larger diagonal pattern. The 100% extension target would be ideal for that C wave. Yeah, so we have an A wave up into the September high, a B wave down into the October low, and the C wave up could be unfolding now. As I said, 100% extension target would be ideal at around $35.63. Higher is always possible. But for now, I'm just watching this as the next level. And it is very important to understand that the price should really hold that $33 support level, because any break below the 50% retracement of the previous third wave would really challenge the idea that we're going up more directly. What the support area is telling us is whether the move up is an impulse. So below $33, well, we can still not rule out one more high in wave 5 of C. The move up is not going to be an impulse, which creates, let's say, very, very balanced probabilities. And it also increases the risk of further, let's say, a morphing of wave counts. Because with only a three-wave move up and a break of support, we're just dealing with corrective patterns, and that's going to be tricky to deal with. So that means next week will be important to focus on the $33 level. That is the key micro support level. So any break below it, it might still be okay, but it shouldn't be a sustained break below that level, because again, the 50% retracement level should normally not be broken in a fourth wave. So next week, possibly the price will move higher and form the fifth wave that could reach, the area between $35.63, which is the first ideal target, and $37.08. Now, any break above the last swing high, which formed here on Thursday at 34.27, could indicate that this fifth wave to the upside has started. There is an alternative wave count in yellow, which is even more directly bullish. Actually, not so different from the white count, but that we don't really need to distinguish at this point between the yellow count and the white count. Now, below $33, things are going to get difficult because the move up doesn't look quite finished yet. But pretty much below $33, the October low will be the key level to watch. And that's located here at around $30.15, because that would be the invalidation point for any further upside below $33, which means the risk is quite high. If we break below $33, the key level moves down to 30. There's quite a difference. So overall, still watching for higher possibly next week. Not the cleanest microstructure from the lows, and also the pullback looks a bit messy, even though that's just corrective price action into support. But that should give you all the levels for next week. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out these stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.